Hello guys. Welcome to second part, another part of trading with US30 Ghost. This is one of the uh, lessons whereby I'll be focused only on strategy. Please, if you have questions regarding stocks, investing in financial stocks, properties, and all that, let's wait for another video. I think the next video will be about stock investments and where to find brokers that are, from our country and we can use that are verified and all that. But today, man, I'm very, very, very happy that I'm with you guys. This is the next part of our trading, market analysis and strategies. So yesterday it was NFP. Yesterday it was NFP, and looking at Instagram, I saw a lot of crazy, crazy, crazy videos. Man, people were making money, other people losing money. It was crazy. But this NFP was different, totally different from the other NFPs we have experienced. Remember, guys, we have 12 NFPs in a year. Like each and every first Friday of the month, you get an NFP. So like this is NFP times 12. So each and every month, the NFP, you have to study NFP, how it manipulates and how it occurs and what it does. But this one was very, very different. So anyway, thank you guys for yo. I'm excited, bruh. I'm excited because hey, my analysis were top notch. But let's get to it, man. Let's not lose focus on why we are here. Um, the last time we dealt with SMC, but we started looking at supply and demand. We started looking at supply and demand. So after that, I think we're continuing our our mission, man. We have a mission to accomplish. We have a mission to accomplish. We have an agenda. We have an agenda, my friends. We have an agenda. So we are done with supply and demand. Now we are getting to um object list. Okay. Removed all the drawings. I removed all the drawings, and we can proceed. So as I said, guys, as I said, this is what we are focused on. This is what we are focused on. SMC. SMC. We're going to look at chart patterns. Looking at market structure. We're looking at liquidity. We're also looking at chart patterns, market structure, liquidity, and yeah, that's basically it. So supply and demand, you have done with supply and demand. So let's get to whereby we understand the market structure now, because this is how it goes. Supply, smart money concept it's a broad topic, né? So you should understand the market structure. It teaches you how to understand and predict the upcoming direction of the market using understanding the market structure, how the market is moving, how to catch an impulse during a base. You have what you call a rally, base rally. You have to catch that when the market is reversing, what the market is doing, your order blocks, your supply, your demand, your take profits, your resistance, your support. So liquidity is whereby you understand the manipulation of the market, like where banks would like to take you out so that you don't join their whole grade. So what you do is you analyze the market nakedly, a naked chart. Naked. A naked chart. You have a naked chart that you can understand without any indicators, and you can make I'm not against the use of indicators, but what I'm saying is, if you can understand the chart, indicators are bonuses. Yeah, yeah. Indicators are bonuses, man. So, okay. So what you're going to look for is the market structure. What we're going to learn today is the market structure. Or another concept that I may have forgot, but I didn't really forget it, is called a market imbalance. It's called a market imbalance. So you have imbalances, and you also have what you call the behavior of the market, behavior of the market. I'm simplifying this. I'm using like this because I want you to understand something. How the market behaves is very important. When the market is in a corresponding mode, when a corrective mode, or in an impulse mode, you should like know what the market is doing, but the kind of candles the market gives you. So if you can understand that this market is in a corrective mode or in an impulse mode, you are good because you can anticipate the direction looking at the kind of behavior. Whether you had this, then you can get this, when you can get that, you can get that. Let me show you what I mean. Okay, let me show you what I mean. Okay. Let's zoom. Oh, this is what I mean. This is what I mean. You have an impulse, base, impulse. Uh, uh-huh, uh-huh. What I'm saying is, you identify that the market is bearish, is selling, right? An impulse, impulse, base. You know that the market is in an impulse mode, right? And you're only looking for sells here. When the market is reversing, by looking at the kind of candles the market gives you during this stage, you can anticipate that the market is either going up or going down by looking at what the market is doing, what the market is giving you here at this point. This is a reversal pattern, right? And if you can identify the reversal part, looking at the candlesticks and the kind of structure and the kind of chart patterns the market gives you here, you can anticipate where the market is going back. And if you know your supply and demand zones and all that, you can, get from here to that point, right? Can get from here to that point, looking at what the market is giving you. So that's what I'm saying. That's what I'm saying. So that I'm sorry, that was not what we were supposed to do, but okay. Market structure. Market structure is the direction that the market is going in. Direction. What direction is the market in at that time? Is it bullish or is it bearish? When the market is bearish, when you say the market is bearish, when you say the market is bearish, when you say the market is bearish, so this is what you mean. So you have a high, so the market also gives you a lower high, again, lower high, again, lower high. So when the market is bearish, the market is like this. This is an impulse, base, impulse, base, impulse, base, impulse, right? When the market is like this, when the market is like this, we're only looking for sales in a bearish market. Don't risk looking for buys. You know that the sales have the bears have the direction of the market. They have won the war between bulls and bears. So the bears have won. So now you're looking to join in on what you have, on what there is. So okay, right. So what is it that you do? What is it that you do in this situation, right? You have what you call an impulse. Impulse, right? Impulse, right? Impulse. Impulse is where the market is going down, then the market retraces, it goes down, retraces, it goes down, and retraces. So impulse, base, impulse, base, impulse. Look this. I don't know why it's moving like this. Impulse, base, impulse, base, impulse, base, impulse, right? You're only looking to catch impulses at at this point. You're only looking to catch impulses at this point. You're only looking to get impulses at this point. So you have an impulse, a base, an impulse, a base, impulse, base, impulse. So what you do is you analyze the market when it's in a base mode. Sorry. So when the market is in a base or the market is retracing, this is the point where you look for an entry here. At this point, this is the point where you look for an entry. So you have chart patterns that you can use to get an entry here. Chart patterns you can use to get an entry here, right? So that's why we use chart patterns, because sometimes we may not know how to use certain things like the Fibonacci, or how to you not using your look left correctly. So you can use a Fibonacci, or you can use a chart pattern. So the chart patterns that are called continuous chart patterns, and the chart patterns called reversal chart patterns. So you identify whether the market is continuing or the market is reversing, going to upside. Is it continuing to go down, or is it reversing to the upside down? Upside. So when we get to the chart patterns, so you know what to do when you get to the zone. So wait, okay. So you analyze this points. You analyze this is where you get your. So the market is bearish, right? Market is bearish. Impulse, base, impulse, base, impulse, base, impulse, right? So when the market is like this, right? Yeah. So this is where we are. The market is bearish, gives you a high, a lower high, lower high, lower high, which is an indication that the market is selling. So an impulse, the market traces or takes a break or tries to pull the market up, but it fails. Comes down, tries to pull, fails, comes down. So what you're looking for here is impulses from here to here, here to here, here to here. That's what you're looking for. You are not supposed to look for, I don't know, buys at a market like this. I think it's better to look for sales in a market like this. So if you're looking for sales, you have more profits and the market is moving your way, and you can. But when the market is reversing, there doesn't have that much money, and there's a lot of manipulations here. And when you're buying, going up, you get manipulated, and boom, take some money. So what you do is you wait for the market to do this, then you get something like this, something like that, something like that, something like that, something like using the 90% rule, using the 90% rule, using the 90% rule, 90% rule. Using the 90. What did I do? What did I do? What did I do? What did I do? Using the 90%, 90% true. Using the 90% true. Okay. This is what you do in a bearish market. This is exactly what you do in a bearish market. This is a short position that we use when you're selling, right? And a short position is whereby a 90% rule is based on your lows. You see, 90% rule is based on your lows, man. On your lows. This is what your 90% rule is based on. So you are certain that when the market is going to test this. This is a weak low, right? This is a weak low because when the market is going up, you're looking for a higher that the low should break. Sure. You're looking for it for the market to break this low. You're certain that the market is going to break this low. So you're on your safe side because that's where you buy. When the market comes, you are out of the market. Watch how it responds. Because it might come, take 50, go up. But the moment it reaches your low, you're certain that your profits are taken and you're safe in the market. Comes back, you're certain that market has failed to go up, so it's going to test this low, right? The bulls are here, they're trying to take the market up, but the bears have won there, taking the market back to the bulls' orders. You understand? The bulls, the bears, bulls, bears, bulls, bears, bulls, bears. So how banks and other big institutions works is there's a war between bullish and bearish. It's a war. It's a war. So what we want as traders is to be on the winning side, right? We want to be on the winning side. If the bulls win, you want to be buying. If the bears win, you want to be selling. Don't be on the losing side. Oh, the good losing side. So then this is how you join and sell in the market. This is how you join and sell in the market. Let's go through a chart and see what exactly we are talking about. What exactly we are talking about. What exactly we are talking about. Okay, so this is what I'm talking about. You have a high. You have a high, right? and it gives you a low, comes back, goes down, yeah, uh-huh, 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 uh-huh. You see? So you have an impulse, a retracement, impulse, retracement, impulse, retracement, impulse, retracement, right? You want to be catching impulses. See the kind of movement you want to catch. Traces, the kind of movement you want to catch. Traces, the kind of movement you want to traces, the kind of movement trace. So this is how you do. Like this is what you do, right? Until you are certain that the market is changing direction. Please don't think the market is changing direction. If it's not, if you're not certain that the market is changing direction, please don't make such decisions to find the market when you are not certain or where the market is going. Please be sure what direction the market is going because of what market is presenting to you. Don't be the fortune teller. Respect the market enough to say, I want the market to give me this, and have the patience to, take those entries, But anyway, this is what I meant. This is what I meant. So if you join in the sales, you are gold. And when the market is reversing up, you can say, yo, I'm going up with the market. Anyway, this is a daily time frame. So just letting you know what you should do. Now, let's go to a bullish market. Bullish market. Bullish market. Oh, okay. Okay. So when the market is bullish, you have a low, new high, low, high, high. Yeah. So this is when the market is buying now. Now we are saying the bulls have won the war. Now they're taking the market to the upside. So what signs do you have that the market is going to the upside? The signs that you have. Signs. Okay. First sign. First sign. Change. Reversal type pattern. Bigger structures. Higher highs and lower highs. Lower low. Oh, what did I say on that side? Let me see what I said. Let me see what I said. Oh, lower high. High high. Lower high. High. So this is your, let's say you have a zone here. Let's say you have a zone here. The market taps into your zone and it goes up. Yeah. So now you are not certain whether the market is bullish or bearish, right? So the market gives you a high. So it gives you a high, gives you a high, right? Gives you a high. Coming back, you have a low here, right? You have a low here. So you have a low. So instead of the market coming back down to break this low, it gives you a lower, higher, low, low, higher, low. Higher, low. After the market gives you a higher low, what it does is it breaks the previous high, which is called a break of structure. BOS is called a break of structure, right? After it breaks the structure, gives you a higher high. Gives you higher, higher high. Then it gives you, instead of the market coming back down to break this, it gives you a higher low, lower higher than the previous one, a higher low. Higher low. And what do you call this? Yes, call this a break of structure. Call this a break of structure. Call this a break of structure. BOS. Call this a break of structure. Right. So another high, higher high. Breaks this one, previous one gives you a higher high. And instead of going to break this low, now it gives you a higher low. So this is an indication that the market is bullish, right? That we are buying. And in this kind of market, I told you when the market is selling, you're selling. When the market is buying, you're buying. You want to be on the winning side of the market. So if you are smart enough, if you have skills, this is not hype. Forex is not hype. Forex is not. People are making this look like it's fish man. So what I'm saying is, if you can identify the kind of trend the market is in, you will be able to join the winning side. So if the market is bullish, you'll be buying. If the market is bearish, you are selling. Please don't look for the opposite, and because the bulls are winning, and when you're going with the bears, right? The bulls are winning, but you are going with the bears. For what reasons, I don't know. But please, if the bulls are winning, go with the bulls. If the bears are winning, go with the bears. Go with the winning side. Don't be on the losing side. Yeah. So what you look for, I think you guys know, this is an impulse, a base, impulse, base, impulse, base, impulse, base, hella, hella. Right? So I told you about another tool. I want to give you something. Just This is what we call the Fibonacci retracement tool. The Fibonacci retracement tool, right? So this tool helps you to get an impulse after a retracement, right? The market is bullish, you have an impulse, the market is retracing to the downside. You can use the tool between these 2 points, right? Between the 2 points to get the exact sniper entry. Remember here you have your imbalances, you have a supply, so you have a demand zone, market imbalances, demand zone. You have this two also. Confirmations, my nigga. Sorry. Confirmations, confirmations. Be confident when you take a trade. I have this Fibonacci tool. Okay, it's supposed to. Okay, this is the premium side. This is the what you call premium zone and what? Yeah. So you have this zone 50% line. When the market comes back down to your zone, you're getting entries. Same applies here. You take it there. Take this here. Take it there. This low. And you have oh Mudim. Oh just yeah, I forgot. Sorry. Use it as you go, looking for buys, So I'll just showing you the tool. We get to it, don't worry. So this is an impulse, a base, impulse, base, impulse, base, impulse, base, right? An impulse retracement, impulse retracement, impulse retracement. Now you want to get the impulses, right? So you analyze the market here to get this. You analyze the market here to get this. So we are all looking to get impulses the way the market is moving strongly and there's a lot of money. A lot of money. So this is the long position you use. This is the long position you use to be safer. Safety. To be safer. This is what you do. Take a long position. Come on, man. Take a long position. Identify your targets. So the good thing is you analyze the trend of the market in a higher time frame. So this might not be that small, right? Might not be that small. So when you're on a 1 hour time frame, 4 hour time frame, this might be like 3, 4, 5 candles, like 1 hour candles or something. 1, 2, 3, 3-hour holds in market for 3 hours or something. Imagine. So you analyze the market on high time frame. Please don't become a scalper. Don't scalp the market. I don't have problem against people who scalp the market, but I feel like if you understand the market, you don't need to scalp. Just need to be certain of what you're doing. So here, that's high, you're out. Here, that's high, you're out. Because you never know what the market might do after it breaks this high. It might come back, then boom, just breaking it a little or failing to break it, then coming back to get momentum and like boom, takes you out. So what you do is lower high, try to your previous high. This low, try your previous high. This one, try to, and that's how you scalp the market going to the upside. That's how you start. Take the market going to the upside. Yo. So that is it. Let's go to our chart and see what exactly we are talking about. Exactly what you're talking about. So, no, let me use H4. I think the market is better in H4 time frame, man. It's better because you will be using an H4. So I love using H4. The time frames I use is I get through my higher time frames like daily and weekly, and I mark my key levels. When I get to my H4, that's when I analyze the market and the trend of the market, and I break it down to 1 hour, then 15 minutes, 5 minutes to look for sniper entry. So yeah. Okay. So as we said, 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 let me clarify something first. Chart patterns are important because at this zone where the market is retracing to the downside, you have your chart pattern there. You have your chart pattern there. You have your chart pattern there. You have a chart pattern there, right? You analyze the market using a chart pattern or your retracement tool, and you trend to the upside. So, yeah. Okay. You guys look at US state and how it's been performing. How it's been performing. And this NFP yesterday, this zone yesterday, that's crazy. That's crazy. So as we said, guys, when the market is buying, trades high, comes back down, breaks so high. Retracement, impulse, retracement, impulse, retracement, impulse, retrace, impulse. So now we are in a bullish market, right? We are in a bullish market, right? Impulse, impulse retracement, impulse retrace, impulse retrace, impulse retrace, impulse retrace. And when you are setting that the market is changing direction, when you have the signs of the market changing directions here, get the zoom. So when you have the signs that the market is changing direction, that's when you can take a decision to sell. But now we are looking for buys in your state only. Buys only. Not only. Some people do. Just look for buys. Look for buys. So impulse, retracement, impulse, retracement, impulse, impulse, impulse. So what I said was when the market is like this, I think it's better to enjoy the bulls. To enjoy the bulls. So your long position from here, you have your order block here, right? Your order block there. You have your order block there, and your stop loss there, and you take profits there. Here, stop loss here. Looking at whatever you have, if you don't have an imbalance here, whether you don't, I don't know, you get to this zone right there. Enter here. Let's say you have a reversal pattern some here. So you get here, then your stop loss is just below this lows. Maybe you have an order block some here. We talked about demand and supply, right? So you understand why I'm putting it like this and why I'm putting it like this. Yeah. So you understand why? Because you might have an order block here and the low becomes your stop loss, right? And after that, you know, comes, touches, take your profits, touches, take your profits, touches, take your profits. When you go to 1 hour and you look at to how the kind of moves we're talking about, look, 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 hmm? Look, look. Where was the order block? Where was your order block? Where was your order block? This was your order block, right? This was your order block. Where is your stop loss? Just here. You enter here. Remember, guys, supply. Remember, guys, supply, 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 demand, supply. So this is your demand zone, right? This is your demand zone. And the demand zone, use the 50% of your demand zone. So from here to here, it's not that much money. If you entered with, after confirmations, you have entered. So this is a strong low. This you can see touched, came back and touched. And when it goes up, you know. Huh? Look at the kind of movement you're talking about. Okay. And when you're selling in a market like this, let me show you something, guys. This is not funny. This is why I specify what to do. Because I don't want people talking about forex a scam. Hey, forex a scam. Hey, forex a scam. When you're selling in a market like this, look at the impulses. Look at the impulses. Look at this impulse. Look at this impulse. Look at how beautiful this impulse is. Just look at it. Look at it. Now look at the source now. Look at the source. Look at the source. You enter here, boom, takes your money. You come back, you try to enter, boom, takes your money. Look at this kind of. Okay. Top and post about saying forex is a scam. When you're looking for source here, the market comes, you're not certain if the market is selling, and you take your source here. Like, yeah, I'm taking my source here. Goes back a little bit, you have patience. Boom. Takes everything in your account, then goes down. Everything in your account. This movement, this small movement, you are here. You entered. This small movement, it takes everything you have. And you keep on saying forex is a scam. Keep on saying forex is a scam. You here, enter, okay, no. Goes down, comes back, boom. Comes back, boom, before it goes. And when you buy in a market like this, look at it. Look how beautiful it is. Look, just, hmm? Just, huh? Same thing that I just said. Buy here, come back. It doesn't even touch you. Doesn't even touch you. You buy here, comes back, boom, boom. Huh? Boom, beautiful moves, beautiful moves. Oh, I'm sorry, I moved it. So I moved it. Anyway, I get so excited when I'm talking about forex, guys, because I love forex, man. I think I was born to trade, man. It's in my blood. So, so as I said, guys, you have your demand zone here, and your stop loss is just below this, and you wait for the market to be at the 50% of your supply zone of your demand zone. 50% is this box. You measure the 50% here. I don't know the name of the tool. I don't know the name of the tool that you can use. It has the 50% and like premium side and the discount side. Yeah, it has the discount side and the premium side. So let's see. Let's try to minimize. Okay, okay. I don't know the name of the tool, but something like I don't know. I don't know which tool is it. I don't know, man. Next time, we'll find it next time. Okay. So, yo, second part. It was a nice lesson. So guys, we have dealt with supply and demand. And this part we are talking about market structure, how to identify the trend that the market is in. And um, it was a good lesson, guys. It was a good lesson. We shouldn't take that long because, I have to keep you in your toes, like keeping your toes, man. So, like I said to those who have my contacts, I trade using NodeFX. I use NodeFX because it's similar to Exness. You have 0.10 going up, and you have very, very good leverages. And withdrawal process, the deposit process is very good. And I'm using. I'm not saying go and create an account with NodeFX. What I'm saying is, if I trust the broker and I trust that the broker is going to do good for me, it can do good for me. I'm going to share the information. I'm not a financial advisor, guys. I'm not a financial advisor. What I'm saying is, I use NodeFX and I have an affiliate partnership. What is it? Where you get people to tell people about the broker in your platforms, and when they subscribe, when they like sign in, create an account, you get benefits, right? That's what I'm saying. Just like any other brokers, top brokers, anything, you get people to you just share about the broker and what it does for you. And when people sign up, they give you a small portion, and you do the same thing. Now, when you sign up with the broker, you can make it the affiliate program. When you then you're talking about, well, I advise other people to use that broker, and you get benefits. So I'm looking for benefits, But at the same time, I'm looking after you because the first time I used RCG Market, I showed you my profits. Even if it was 1,200, 800, I did show you my profits. Now, like, this is how I use. I can move money from Skrill and take this time, and I love when a broker. I love using Skrill accounts because when I use Skrill, because money goes in fast and I can like trade whatever I want, and I don't need to do this. I just put money in my Skrill, and I can put in this broker or this broker or this broker or this broker. So what I'm saying is I use NodeFX, and I'll share you my link so that when you sign up, you can also give me a small portion. I can also get benefits. It's not that much, it's just more something small. But what I'm saying is I'm looking after you because you are my subscribers, you are my clients, you are my friends, you are my Forex family, you are everything to me. So if I don't look out for you and I give you scam brokers, I will only be doing you and me justice because I want you to be profitable and enjoy what Forex has for you, and just, man, you understand. So just go check it out, research about the broker, hit me up, get my reading what on my YouTube. It's there. The link is there, and we're good, man. We're good. So yesterday, this is what happened, okay? With NFP, bro. With NFP, hey, with NFP. So this is where we at yesterday. This is where we at. The nice thing about identifying our time frame, we have what you call change of character. We have what you call a change of character. We have what you call a change of character, my friends. Ish, this was a good day. This was a good day. This was a good day. want to show you something. I want to show you something. I want to show you something. And please listen to me. Please listen to me. Please listen to me. Please listen to me. You have a low, high. Instead of the market giving you a lower, higher low, it broke this. Which candle broke that? So you have this zone. So one thing that I want you to understand is look for the market imbalances. Look for the market imbalances. You have a Fibonacci. This is your 50%. This is your 32 and the 38. So the moment it reaches your discount level, you know you're looking for sales because you already know that the market is. So the thing about news is news would try by all means to manipulate. So here you have a low, you have the market coming back down to get liquidity. You have this. This occurs everywhere, bruh. This side, this low comes back down, takes out, started going up, going up, going up, going up. It failed to break this, came back down, boom, broke there. And when it gets there, let me not talk too much, my friends. Thank you for today, man. Thank you for today. And I hope you meet on the next part where we'll be dealing with continuation chart patterns, reversal chart patterns, liquidity, support, resistance, key levels, strategies within there. So I'm going to do separate videos regarding certain apps or certain brokers that are available for us to invest in stocks. Investment. Now you're talking investment. This is trading and you're talking investments. And this is all also finance, that is finance. And I'm going to give you information about things that I use. Things that I use. So this is what I use. I use this. You just check it out, try it, and see how it works for you. Because investing your money, guys, investing your money. If you make 15,000, instead of taking that 15,000 and going buying a lot of useless things, take at least 2,000, put it in your investment. Look for something to invest in, whether it's a company, whether it's a stock, whether it's cryptocurrency, whether it's just learn to invest your money. Because people are out there making money with dividends and all that, and you are here not knowing how to invest money. It's a shame. Anyway, thank you guys for today, man. I had fun. You.